Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Wednesday, the 12th day of March 2014, and this is the daily report for gold and silver. Very nice showing, strong market move to the upside across the board in the precious metals markets. Crude is trading lower, Dow is off a little bit, dollar is getting hit a little bit, but to the most important markets that we follow, gold and silver, currently, as you can see, $1366.71 puts it up about $17 on the day. Now the high is $72.10, the low is $53.40. More on gold in a second. Silver also breaking solidly to the upside. Gold is showing about a 1.3% gain on the day, while silver is showing almost a 2% gain on the day. Actually, a little bit over, trading up about 42 cents. Low 2072, 2070, high 2152. Current print on the screen 2128 on the day. Now, of course, we will be looking to raise our stops up a little bit later on, either today or tomorrow, and I will send out a special trade notification on that particular move. We're looking at the same 240-minute chart, and really what we can ascertain about this current market position in terms of strategically where it's at, and this is what's most important to me, is a close above this point or at this point, meaning 1365 is extremely bullish. Of course, this is where we peg some resistance at, and as you can see, we are currently trading just above there. Should the market continue to move higher, and I believe that there's a good opportunity that it can, we have a couple other areas that we'll want to take a look at. The first area is just below 1380. I'm going to try to line this up as best I can in terms of a straight line. 1 second here. And so you can see we're just shy of that. And then in terms of different tops that we'll look at, of course, 1435 is going to be one, as well as call it 1419. So these various tops should provide a little bit of benchmarking. If the market continues higher, that's really what we're going to look at. But the key to me is the fact that we have finally, after all of this time, broken above that 1360 area. That to us was a critical level of support, and we were looking to see if in fact we would see any kind of corrective action. We have not. Statements made by the new vice chair, I should say, Fisher over at the Fed, is saying that we still need to be accommodative in terms of our monetary policies to keep the economy kind of going, and the jobless rate is not at an acceptable level. That spurred the market. We did see the market really starting to take off in Hong Kong, but we really saw the massive movement once it arrived on our shores here in New York. Traders, this is a daily chart. This is the chart that we've been using with our Andrews pitchfork. I'll start by compressing it. There is no doubt in anybody's mind when we look at this particular Andrews pitchfork to see that when we look at our upper handle here, this is the 0, our lower handle here, our 100, and of course, or I should say our prongs, this being our handle, we are absolutely just at this upper level in terms of this band here. And we haven't seen that really at all since the market was sitting at 1800 and came down. That's where that particular band was created from. Now I'm going to go ahead and blow this up just to give you guys an idea of how close we are to this. We're still a ways away. As you can see, once I blow that up, we are still a ways away. But my question is, how will it react if the market continues up once it hits this particular zero line? Because we could see the market trend a little bit higher and then maybe break down. I would look for it probably to break down to the 23% level, 38% level. But here's the thing. If it breaks through this, traders, we're in a whole new ball game, because what that tells us is just in the same way that that long-standing resistance line got broken, which is this line here. Again, this is a daily chart. This has our Elliott wave count, a couple of different levels to look at, but primarily the reason I pulled this up is this long-standing resistance line. Once we clearly broke through there, we had the market really break out solidly and continue in the trend. In the same way with the Andrews pitchfork, a break above that could signal a fairly sizable breakout. Now, in terms of what we're looking at, we're definitely out of the woods in terms of that pure bear market. We correctly identified this double bottom here at 1181. I think that we correctly got into the market because we got in, our first particular trade was in at around 1258, got out, I think, 1325, got back in at 1333, and now we're long at 1333. Market's trading about $30 above that. So we're getting some nice trades under our belt right now, but more importantly, we've got a couple of different areas that we really want to look at. And as I said, we pointed those out. We've still got a ways to go. This is that 1435 right here, and that's the mark that I'm looking for this market to go to. We can see quite effectively that I want to make sure it's thin enough, but quite effectively we are above this first particular top, and a close above this, and if we were to trade above this for the next couple of days, that to me is a really, really bullish signal in the marketplace. And it really tells us that what we want to start looking at is for the market maybe to move to either of these areas right in here. Now, traders, we touched upon this a little bit the other day. We've been talking about it since Friday. And really, it's that macro view, because I think we need to be guided by the macro view, because in so many occasions, we tend to get lost in the details, and then we really don't have a real concept or clue. And what I mean by that is this brutal sell-off that we witnessed really was a bear market. There's no doubt we used a bear count to count our way down. But if in fact it concluded, and if in fact that ended this major fourth, right? 1, 2, 3, 4. That means that we're now in a major fifth, and a major fifth is a really exciting statement, because a major fifth, although we'll go through 5 waves, it's a 2-year cycle. It's a super cycle. Of course, these majors to me are super cycles because they'll take years to really unfold. But that's telling us that we're going to go back to some recent highs that we saw, and in all essence, according to the model, if we are in a major fifth, we are going to actually take out this former high at the top of the fifth wave. Maybe 5 out of 5, maybe 3 out of 5 might even match it, or 3 out of 5 might take us back to 1800. But more importantly, if in fact we have correctly identified the fact that we are now back into a full-blown impulse phase, and we have identified this particular bottom here as an effective low in the market, it means that not only traders can look for some productive trades over this next coming year, but for those of us that also purchase physical or are involved in the electronically traded funds, or funds that are special mineral funds, gold funds, we can look to begin to accumulate and add to those holding positions, knowing that we'll probably not see these prices this low for quite some time. And that to me is really, really important. So traders, once again, this is really what I mean by the big picture. Now, this is a 2-week chart. It is in Japanese average format. It tends to really clarify the trend itself, reduce a lot of the noise. It's not something you could trade off of by any means, but it really gives us a handle on this big picture, in which we're looking at this large wave 1, starts roughly 2002, 2, 3, 4, and we are now in that major fifth. That to me is probably telling us that we could experience one of the best years ever in terms of trading this market, as well as accumulation in this market. There could be some enormous opportunities. Now, one of the things that I was reading today was the fact that even though we have been tapering our monthly bond purchases, the Fed is who I'm speaking about, of course, and we're down to $65 billion a month from $85 billion. The fact of the matter is that we have added onto our books $4.17 trillion from these collective purchases. And the question that I have to pose to you and myself is, what effect long-term is that going to have, and how will that affect gold? And the fact that we are possibly at the doorsteps of another major impulse wave, and of course this impulse wave isn't going to be straight up, it's going to be a series of 5 waves again. But the fact that we've added this 4 trillion plus in terms of putting it onto our books, how will that affect the dollar? And if the dollar weakens because of that, we know that gold is going to strengthen. There are a lot of scenarios right now that are kind of brewing that could push this market much higher. And the fact that our model is saying that that's probably what's going to happen kind of gives it credence in terms of the weight of this particular model. And then lastly, this is a set of Fibonacci extensions that we are using to attempt to forecast the price move that we might witness here. And my immediate forecast right now, in terms of what I'm looking at, if we in fact get continued confirmation that we are in this impulse major fifth right here, by 5 out of 5, the upper level of my target right now is about just below 2100 at 2068. So what about silver during all of this time? Well, you know, obviously, if we see gold go to new highs, we're going to see silver make a play also. Will it go back to 40 or 50? Well, it certainly could. It certainly could. Now, it's harder to believe that right now, but here's what I'm looking at in terms of our shorter term perspective. 2050 is where I'm calling for our real major resistance. We have a band here, and then call this 2075 to 2325, we'll say. This is going to be a level that I see, if the market continues to trade higher, where we'll get a real band of resistance. That's going to kind of match to 1435. And then 25 is absolute resistance right now. Those are the two levels that I look for on the upside should we see silver continue to move with gold. This has been Gary Wagner, wishing you as always good trading. We certainly have been getting that this week. We'll talk to you tomorrow for another daily update and review.